Hey, good morning, everybody. Bob Trade Genius, the 17th of August. And I'm going to do a really big macro picture here and why I remain extremely bullish on gold and silver. And also just to help people understand, there's so much talk about, well, as we roll over, the dollar is going to get stronger and gold's going to fall, and, all these people that have really a binary understanding of gold and its value. And I want to kind of disabuse people of that notion. Is gold in and of itself is what it can buy, not so much what it's being measured against. And people think that the dollar and gold have an inverse relationship, but that's not true. There's many times where gold and the dollar move together, and it happens during times of economic stress, in which we're in right now. The dollar's getting stronger, as you know, and the price of gold has been moving higher, and that's going to maintain. And in the way the American political core is working right now is that just forget all the Trump and Powell and all this bickering back and forth. They're trying to thread the needle here in terms of maintaining the reserve currency of the world, the US dollar, at the same time produce enough new dollars out there to keep the economy from seizing up from low liquidity. So there's plenty of things they can do. And the one thing they did here I want to show you is this is when they went full on board with the quantitative easing and the Fed lifted their balance sheet. And that's what you need to watch. Watch when they lift their balance sheet again. And once they do that, then the price of gold and silver are going to become more valuable once again. And that's what I'm looking at right here. So, and that's, this move here is sick. 800 as a double, okay? And now we're off a higher base, and we're sitting at 1500, and we start doing quantitative easing again. You don't know how much, but you can apply some logic to it. And our view has always been the next stop is about 2500, but 3000 works for me too. And it's just simple mathematics because the amount of gold available for use as collateral or backstop for currency is relatively rare in terms of growth versus just producing credit dollars at will. And that's the other thing I want to talk about too. So when people talk about the United States government is producing all this this debt and it's going to destroy the dollar, they don't really understand. There's two kinds of dollars out there. There's what I call credit dollars, and then actually physical currency. And so when you create credit dollars, when people renege on their loans, those credit dollars get evaporated, and so you don't truly get inflation or truly get really poor currency devaluation. Is when you start doing what they call the helicopter money and actually start mainlining currency into the population. That means going to the mint and creating currency. And that's going to come before all this is over. And then you'll start really seeing some moves here because then now you get a relative difference. And believe it or not, they need to do it. That's what's killing everybody right now is people can't absorb any more credit. You see it in Europe and you see it in Japan. And, I'm not sure. I think maybe Korea and all those guys are all near zero. And they because people can't absorb the payment. And that's what people don't understand about credit too. People say, "Oh, we're at 2%. We create this economy world." That doesn't matter. What matters is the carry, and the carry is that you make so much money, and if you want to borrow more money, you don't look at the amount of money you borrow. You look at the amount of money that you have to pay back, and can you slip it into your budget or not? And that's why interest rates keep falling because they need to keep producing credit to keep the system from imploding, but people can't absorb higher payments, so the interest rates keep falling. That's why Europe went negative. Europe's in deep, deep weeds. And I think before we get that way, we will definitely mainline currency. And I think Trump's kind of setting that stage here of complaining about the Federal Reserve. They only have really one tool, and it's a credit tool, where the Constitution allows the Congress to actually produce more dollars. So just keep an eye on that, and that's what's really going to fly this stuff. So don't listen to these people talk about gold's going to 800 and this and that and everything. They just fundamentally don't understand the lengths that politicians will go through to maintain their position, and the elites maintain their wealth. And that's all going to happen before this thing gets reset. And now between you and I could be mad about, and I hate this, but do I really, really, really want to put my family through a Great Depression? And I hold a mortgage, and then all of a sudden eliminate my ability to make enough income to satisfy the mortgage. The whole thing goes into a spiral. People just think, oh, that'll just serve people right. But really, does it? The dislocation would be catastrophic. So this is a mess they made, and that's the thread that they're going to try to put through the needle. And that's why Europe went negative. We have to go a different route because we're a reserve currency. So we're going to have to actually create more currency. And, that's coming. So don't be surprised when you see it. So let's look at the chart here. So I like to look at these impulses here of money flow. And then here in 13, you got to realize this is monthly. That one failed. And we were coming down hard here. We got to 2016. You notice that's when, the year Trump got elected. And this is when the Chinese were devaluing their currency too, making our currency stronger. And that's really was the bottom of this move here. So about 1,050 area. And now we're up 50% on gold in 3 years, which is just insane for a currency. And we're running out of areas. We're running out of areas of resistance. The next one here, in my view, is around 1605. You look at these big candles, 1605. This one here at 1680 area. Then next one here is 1800, and then we're gonna hit the highs. But these are kind of, look at these bars are pretty huge monthly bars, and they're not gonna end. So we may get a consolidation, here and there, and then a push higher. But look, this is what they're anticipating. Okay, traders aren't stupid. They're trying to front run the Fed right now. You can see it with TNX or TLT, and I'll show that to you in a minute. So that's what gold looks like. And the other thing too is when it hits resistance here, it basically flagged, and it just ripped higher again. And so then here's silver. And silver is just amazing because it's really just coming out of the blocks. And this one's been extremely manipulated for whatever reason. I have no idea why they chose to just beat this thing down so much. But we're coming up here on a cup and handle. This is the area I'm watching right now. This area I think will be resistance here, 2021 area. And then it may consolidate for a few months. Then once it does that, 14 to 20, we're looking at $26. And then decline. But silver really went nuts. The thing about silver is it's more liquid, and there's more suppression on it, so you just never know if you're just going to start getting this thing just to absolutely rip. And so that's why I like silver so much, and that's why you got to own some of the silver miners, even if you just tuck a few away. And if we get to 2011 kind of pricing on silver, the way these miners are leveraged to the price, they're just going to go absolutely ballistic. So just keep it in mind. Silver's my fave. And then I want to show you TLT. And this is what front running looks like. Okay? So, bond market's not stupid. They know the Fed's going to have to go back to quantitative easing. So, they're front running the market. and that's driving 10-year yields down, driving everything down. And that's when you also get this crazy talk about inverted yield curve. We're going into recession. Is don't necessarily believe it. Okay, so it's possible 12 to 15 months out, but it's not going to come because of the yield curve. Okay, it's going to come from companies that overextended their borrowing. People don't realize that companies have spent 103% of their cash flow buying back stocks, and you can't maintain that. So I expect to see the stock market start to fall off, and I expect my precious metal commodities to do well. But here's TLT. It's coming up. Look at that channel. I mean, this channel this way since 2011. Okay, interest rates keep falling, and we're going to push down. So I'm looking forward to doing a refi here at some point soon, and I'm just not sure what I want to do. I have a VA loan, so I can refi with just basically a signature, so I don't have to even qualify. What I mean by that is I don't have to go through the whole rigmarole of sending them all that paperwork. Nice thing about serving in the military, it's one of the bennies you get is once you get set up VA loan, you get what I call a mulligan refi. So as long as you don't take any cash out, which I have no intention to, is that you get to just a refi. If I wanted to take cash out, then I'd have to do a normal qualification and take cash out. But I'm at my age now where I'm trying to just rip down the monthly and build up equity, and I'm looking forward to this being a something I'm going to pass through to my children. So that's where it is, or in case I needed to live on later in life. But that's that, and then I'll show you TNX because this is the inverse of it. And right now we're down to where we were in 2016, and this is the last time I went and did my refi on my home. So and I think we're going to go lower. That's why I'm not doing it. So I think we break right through these levels, and it's going to be a beautiful thing. And so just keep in mind that the rest of the world have no yield at all, so they're all pouring into this country to get any kind of yield. The Japanese are going crazy with the yield. But anyway, I'll do another video in a little bit. I'm going to go through the miners that I like. And I know I monologued here too much, but if you like what we're doing, you want to get some of these signals, these are available to you on TradingView. And as long as you're a subscriber, we give you access to them. And it sure helps visually seeing them. I originally did these with my partners in crime in the company, and cause I like to see things pop up, and these visual cues help. And we thought we'd share them with everybody else. You guys have a great day. Talk to you later. Bye-bye.